Hey guys, it's Michael here. Just wanted to pop in and say hi. I am going to start talking actually at 7:30. So in the meantime, I will be sharing my screens with you guys, and feel free to pipe in with any questions or anything that you want me to specifically go over. We've got a lot to talk about, so I'm excited to get ready and going. But let me know if you could hear me. Actually, that would be a big help for those on the channel. And other than that, see you in about a half an hour. Thank you very much. Talk to you soon. All right. Good evening, everybody. Welcome to the weekly market preview for futures traders. My name's Michael, and I'm known as Ceres Trader on the channel on TradingView specifically. What we're going to go over today is I've got 6 segments, kind of pretty hard pace, but we're going to get through it. I'm going to talk a little bit about what's going on globally and give you a bit of a macro pulse. It's frankly dominated by oil. We'll also look at potentially some key news or some other drivers that you'll want to look at. I do have a couple of daily chart reads, so we'll take some time to look at 5 or 6 different markets on the daily chart, and then I'll finish up with a bread and butter 30-minute set up for specifically Monday's action, and we'll roll into a little bit of a trade review and a trade that happened on Friday that you might want to see in oil because it was a fantastic trade. But we'll get into it. First things first. Let me just say hi to wherever you are. Good evening. It's about 7:30 in the evening here on the East Coast of the U.S. But I understand most of you are probably already into your Monday. So good morning to all those folks. We're going to frankly start off with looking at what's been going on here in the last hour and a half or so. Just wanted to touch on a few key items. Let me look at the dollar first. The dollar, when you look at the DXY, I think it was actually down a little bit. We're down a little bit from the start from last week. A little bit of dollar weakness has translated into a little bit of early gold strength, but that's kind of subsided a little bit. But we've got the dollar DXY at 115.38. It was at 115.56, so we're off of about 20 pips or so in the DXY. What I'm looking at in the dollar, frankly, I still think there is quite a bit of dollar strength, but we might be hitting a little bit of a peak, and so we'll talk a little bit about that. On the 5 minute side, certainly there was a little bit of a bias down, but you look at it, the dollar's been relatively strong and has been for some fundamental reasons, not the least of which is oil is transacted in dollars, and people need many more dollars now than they used to just to buy oil. And what that had done, really up until last week, was basically put a sell on gold. Especially a number of Asian countries, from what I've been told, they actually needed to transact to get their oil in, and they sold pretty significant amounts of gold. There were some other sellers of gold as well. But one of the interesting things I think you'll want to note is that gold last week opened at the lows and closed relatively high, really at the highs of the week when it came down to it, whereas U.S. equities and stocks in general opened higher and closed at their lows. And that's something that's very telling. I think that that's really critical to note is that, it might take a lot to get the gold market down. And we were actually just bid up a little bit not too long ago, half hour, 45 minutes ago. We're kind of unchanged now. But I think that what you've got to realize is that if the U.S. stocks really do take a hit, gold is vulnerable, yes. But will it actually hit new lows? Maybe, maybe not. I actually still would love a double bottom scenario where gold is at 4,100 an ounce, and I think that we might be able to revisit that low level that we saw on Monday in the event of frankly, a panic in the U.S. stock market. All that being said, I do think that the flows and the transactions were relatively good. I took some long call positions in gold for 6 to 9 months out, and I do think that gold will regain its 5,200 level at some point. But we'll get into that here in the not too distant future. Let me talk a little bit more about what we can expect over the course of the next week from a calendar perspective. There is some data coming out, quite a bit of data. All that being said, on the U.S. side, I don't think that data means anything because it's really all about headlines and what the price of oil does, and ultimately what the U.S. Eventually decides to do in the Middle East. And so that's really kind of the macro story in a nutshell. What you'll notice on the screen is that gold is bidding higher again. We opened up and essentially filled the 30-minute gap in early on. And then, we've been bouncing around. Gold still, frankly, is well bid. And there was a tremendous trade that happened on Friday that I'll review at the end of the day, at the end of this session. But yeah, I think that there's no question that the trend is up. I'm looking at probably the 106 level here, 106.22 level as a potential target if we can get above this 103.70. Gold's got a lot of legs, if you will. So let's turn it over and actually let's look at the daily charts first because I do want to take a look at uh, oil on the daily chart. And what I'm going to do is I'm going to actually expand this out. Now, I think that the key thing to note here on oil is that we've been solidly in a bull market, and even with that massive day where we went down from 107 to 84 and had a big dump day, we still frankly stayed well up above these moving averages, and this white line's a 20 SMA. The yellow line's 200. This is a 50. The blue line's a 50. So on the daily basis, we've been solidly in bull market, and this was a tremendous buying opportunity in the low 80s. They bid it up, and actually all of last week, past the Monday, Tuesday, Wednesday, Thursday, and Friday, they bid it up. Today we've actually opened above the range, so we're above the range and above quote unquote perceived value. We are also above the 50% line of this big candle that it had that did the initial dump. And so what you've got to look at here is really what's the short-term and long-term future for crude oil. In the short term, I would say that the risks are very high that we actually go up and try to revisit 120 eventually. In the longer term, I'm going to argue that it's actually pretty bearish because above, frankly, 100, we start to witness demand destruction. And if we get to 120 or 140 on oil, there will be tremendous amounts of demand destruction. And the one thing that the oil industry execs will tell you to a person is that any sustained movement above that 140 or 150 uh, per barrel really could actually bring about a demand destruction and see oil drop to well below 60. And I think that that's their worry is that they may be able to profit now, but they won't be able to profit down the road when demand has been destroyed and economies around the world are suffering from recessions or depressions. And so that's the worry here. A couple of things though on that note, I would still be pretty bearish on crude oil, and here's why. If you look at the chart um, or the ladder of crude oil futures for the different months, you will notice that right now in the front month contract, CLK 26, that is trading at 102.70. All of our other months are well behind, and this is what's known as backwardation. So we've got high prices up front in our spot month, in our spot for delivery right now, and our delivery here at the end of April. But then when you look at June, July, September, and especially December, those prices are much smaller. And in the case of December, we're down to 78.42. So yes, all these prices have risen, but the front months have risen much more. What that points to is ultimately, yes, crude should be shorted at some point. The issue is when is that point? And between now and that point, we could have tremendous amount of risk to the upside, and that's what you're seeing. So one thing for all you crude traders or wannabe crude traders, you should start to look at this ladder because this ladder will give you some clues going forward as to potentially where price is going to go. And I do think price will eventually go there. It's just a question of how do we get there and when, and do we need to see 120 to 140 prices on crude in order to actually bring about that short sell. But in the meantime, it's probably long. So let's take a look at the 30 minute, because I do want to get into the 30 minute. And what you'll notice here, and as a matter of fact, I will probably go through the Friday trade of the week because it was really exciting. So on Thursday, one of the things that you'll see is that we had a big announcement after the market closed, and Trump essentially said that he wasn't going to attack any installations, any power installations or infrastructure for another 5 days. Initially, people thought that meant peace, and so oil dropped rather precipitously from 94.50 down to 89.43. Interestingly, that dropped into what's known as a cam pivot L3 level, and it was immediately bought up. And by the end of that half hour, we were back already where we had started that drop. And H3, H4, these are cam pivots that ordinarily would denote a relatively positive market space. But if you drop below H3, you usually can sell, and the target usually is at L3, and that's exactly what happened. Now, what this did was on both sides of the market, either the sellers or the buyers, they had opportunities to expand their position. And in the case of the buyers, they actually bought rather well. The next day, actually, starting on Thursday evening, Friday morning for most folks, we saw oil drop a little bit, and it dropped, interestingly enough, right into a cam level, the L3 again, um, only without a lot of volume. And so that's really the critical thing when you trade is that if you can get some counter trend moves that actually you can utilize at a good level without taking a lot of risk, just like these folks did, that would turn into be the buy of the week. Folks that bought at the L3 92.16 level on Thursday night, Friday morning, ended up riding that whole trade all the way from 92.16 all the way up to the close. And the close on Friday was 101.15. If they still hold it, they're actually in even better shape now as we've just eclipsed 102.75. So that was the trade of the week. Now, what does the cam levels tell me about the ranges today? Well, we've obviously opened up above range and above value. It does look like we're going to obviously see the 103.70. We kind of touched it earlier. We're going to probably touch it again. I'm going to have a stop, and I'm going to be a buyer above 103.70, looking for that 106.22 in the event that it goes there. A couple of other things. Oil has a tendency of reversing, and when it reverses hard and fast. If we drop back below after visiting this H4 level, if we drop back below 103.70, the H3 level, you should target 98.66 and 96.14 because we've been in a big run up. What ends up happening is we could actually run all the way up to London and see these 106.22s, only to have London traders knock us down. And then, like this trend here that doesn't seem to want to stop, oil could do the exact same thing on the downside. So keep that in mind for those that trade the Texas Teague or black gold. Um, you might be asking, how do you, I'm sharing this with you on a indicator that I've actually built. So if you're interested in testing this indicator, I do offer a 1 week trial. So feel free to text me either on the TradingView board or through YouTube here, and I'll get you set up. But this indicator actually gives you cam levels as well as gives you an understanding around the trend. What you can see is this is looking at the 30-minute trend, but what I'm actually looking at is the 30-minute, 1 hour, 15-minute, and 5-minute trends, and I'm actually scoring it and giving a probability. So, we've been an A plus for a long time. My only concern is how long can we stay at an A plus rating? Right now, that probability is a very high, 85%. That means if you take a position here, there's an 85% chance you're going to be profitable in that position. And so it's pretty substantially skewed. But we have, frankly, the price action to warrant this, and so that's what you're seeing here. And it gives you that. There's some other things that are built in to this as well. It will help you detect changes in trend or impulses, and that's what you see down here. This T plus actually provided a very early indication in terms of a change in trend. And then what you can see is as you start moving up along the EMA, as long as you're using the EMA as support, you're in a fantastic trend, and that's what we've seen. So oil has been bullish, continues to be bullish, which frankly is going to make things difficult on everything else. Not the least of which is gold, but we'll get into that. But more specifically, the thing that this really hurts is the stock market indices, and we'll get into that here in a little bit. But since a lot of you are gold traders, we'll talk a little bit about gold next. Let me do that. Okay. And so on gold, we're going to start off with the daily because we did that last week and it went very well. This is the structure that I have in gold on the daily chart. Now, a couple of critical things to look at. One is, contrary to what I think most bears would have you believe, we haven't done any real technical damage to the daily outlook or the daily bull in gold. As a matter of fact, one would say that this decline has been very healthy and is something that you would expect. It looks to me like it's a bull channel or a bull flag that has been building here on the daily chart. And one of the critical SMAs, simple moving averages that I do follow, that I think is really important for investors and traders alike, is the 200 simple moving average. And gold literally touched that 200 simple moving average on the lows of Monday, and we haven't looked back ever since. It touched it on the lows, literally at the lows on futures, and that was something that was huge. I think we went maybe 100 or 200 below on spot, but futures is the thing that frankly has 85% of the volume in gold, and so that's the instrument that you should be looking at. And you could look at the micro gold futures or the main GC, the Bayer contract. In that sense, it's all the same. But that's what you really want to look at. And since then, we have been bid straight up. Yes, we have some challenges probably today. In the short term, very near term, you could see a little bit of a pullback. But as long as we stay literally above 42.90, there isn't any reason why gold can't resume and go back to the 5,200 level or higher. Ultimately, what ends up happening is something like this tends to actually keep going and continue the move. So, gold 6,000 is still a possibility. All that being said, let's take a look at the 30-minute chart. And I think that that's where there's going to be some opportunities to possibly buy and buy well today. What you're seeing, we started out pretty well. We actually started out with a little bit of a bid, but guess where they took us to? H3 level on the CAM pivots, and we have not gotten above there. There is H4 level 45.89, and as a bull, I would have liked to have seen, frankly, us break above H3 to get to that 45.89 level. I don't think we're going to do it, unlike what we did with crude oil. And so in that sense, we're likely to see some sort of a rotation back, and this is pretty typical of a Monday. Mondays tend to be range days, or at least early Mondays tend to be range days. So your Asia, London sessions could easily retrace a little bit of the range. And that's probably what we're doing is that, we had a nice little breakout on Friday. We're retracing a little bit. Where can we go? Well, L3 is a pretty interesting target, 43.38. And honestly, what ends up happening is markets love to rotate between H3 and L3 a lot. And that's your typical range day. If it wants to expand a little bit further down, L4 is a possibility, Below L4, you've got to look at seriously at a breakdown. But as long as you can stay to L4, and if you regain L3, there's a chance that you can trade back up. So unfortunately, in gold, the ranges tend to be 100 to 150 points every day. Actually, your ATR is $190 every day. So you've got a lot of space that you can go back and forth in, and we're likely to see some lower levels. But I would be actually interested at this somewhere in between L3 and L4 if there's a potential bottom that takes place. I would be certainly interested in buying and repeating the trades that we took on Friday, because those were good trades as well. So what you're seeing right now is a bit of a rotation, and we'll see how Tokyo and China opens, but I do think that that's what you're really seeing. So look for a bit of a range day today, and there wouldn't be anything wrong with that. Again, as long as we stay above, frankly, these 5290s, or 4290s, as long as we stay above 4290, that should be pretty bullish, and I'm pretty confident that we can do that. Now, some will say that this potentially could be a bear flag, and that I think remains to be seen. There was an awful lot of volume at these lows, and I think that that's going to continue. I also think that the volume at the lows will help us with folks defending their positions here in the 4300s. So realistically, unless we see the 4280 level on futures, I'm pretty bullish, and I would maintain that. I think that that's a good bias to do a couple of critical things. As you notice, as the stocks keep going lower and gold does not, that really tells you that people are using gold as a hedge, and that the big declines that we saw early on this year are probably over for the year, in the sense that people find gold as being a good alternative to holding stocks. And we saw that late last week. I think we'll continue to see that again here going forward. Well, let's talk about the stock market, because the stock market has some real challenges, and let's take a look at the Nasdaq. We'll look at the Nasdaq. I may pull the S&P, but frankly, if you know one stock index in the U.S., you tend to know them all. I'll probably pull back. Let's look at the Nasdaq here, and we'll look at the Nasdaq on a daily level. And the daily level has obviously big challenges. We are well below the 200-day moving average, and we are well below the short-term moving averages. And even today, we have kind of gapped lower. So real big challenges here in the Nasdaq market. And I'm actually going to put this in as a bearish fair value gap. All right, so not to say that equities can't stage a rebound, because they certainly could, but recognize that that would be a pretty substantial rebound. There is probably a rebound in place though, because we've gone through one, two, three, four. We're essentially staring at a fifth straight day. That's pretty rare in the U.S. stock market. There haven't been too many 5+ days straight. There were a couple earlier on, but you don't see too many of those. Likewise, we are, I think, at the fourth week negative in the U.S. stock market. 1, 2, 3, 4, 5, actually sixth. So you're talking about 6 straight weeks of relatively down or down colored bars, body bars. That's pretty rare. 6 out of the and actually it's like 8 out of the last 9. So yeah, it's hard. You could short down here, but you've got to be very careful about your shorts, because there is no question that we're probably oversold. Let's take a look at the 30-minute. What you'll see on the 30-minute is a replica of what we just had. You'll notice that higher time frame, obviously bear trend down. My indicator is saying that still an A plus short even at this late stage, just because there hasn't been, frankly, a bid of any sustained value on a half hour basis since 11:30, basically for an hour on Friday morning, and that was it. And then there was a little bit of a rise in Asia on late Asia. And other than that, it's been straight down since Wednesday. So what you'll also notice is that your daily and weekly bear is also down. So unlike gold, unlike oil, which was very bullish, its daily and weekly bear was up. Even if it's in a downtrend, it's still buyable. This one's a little tougher because yes, you might be able to buy it, but you're also swinging against multiple time frames that are truly bearish. So it's hard to be a bottom feeder here, but I am getting close to the point where honestly I'm gonna probably be looking. And one of the critical areas that I'll be looking, especially tomorrow when New York opens, is how does the stocks actually do? Nasdaq does if it opens in this L3 to L4 area. And we may do that. We may even bounce off of there tonight at some point. I have a feeling that we sell deeper into this 23,049 area. Right now we're at 23,131, so there's not too far to go. They've been actually selling it pretty much the last 100 points all since the open. So there isn't any reason why we can't visit L3 or even start to go to L4 in a panic. And I think that that would be interesting. If we saw oil at 106, we'd probably see the Nasdaq at this L4 level. And then the real question is does it bounce or does it not? And can we keep going through it? Again, below L4 is probably a breakdown. But if you can maintain L4, reclaim L3, you've got a long ways up possibly before the next sell. And I would say that a couple of critical points, the key sell levels traditionally, in my mind, have centered around a 65 EMA on a 30-minute chart. That's this orange line here. And when you move decisively in one direction above or below it, it tends to keep going. And that's really what's happened is since Wednesday, it has kept going. And that's honestly your next potential sell point is if we can reclaim up here, possibly move up to the 23,800 to 900 level and then fall back below it. That's where you'd probably be looking at wanting to get access to your sell. In the meantime, if you're shorts keep working because you're well below the EMAs, the fast EMAs. You're on target to more than likely hit your L3 and a good chance that you're going to keep going into L4. Have been repeated opportunities to get into this trend, even if you were below the optimal sell point. On my indicator, it actually shows you some possible B plus entries or R entries, as in reversal entries, to potentially get into the trend. So there were 5 or 6 spots here over the last couple of days where you could easily have gotten into the trend, even on the 30-minute, and there's even more on the 5-minute. If you look at the 5-minute chart, there's literally 20 or 30 spots that you could have got into a short NASDAQ position. Again, a little late now. I wouldn't recommend it, although technically my indicator is still screaming bear and gives it an A rating, so it's pretty strong. All that being said, I do think that it will find a bottom here at some point. We are trading about 2 standard deviations from the session VWAP, and so that's kind of that's something to note. The session VWAP is already up here, and we're trading 2 standard deviations away from it, and we're probably trading 8 or 9 standard deviations away from the VWAP from last week. So at some point, this is going to bounce, and there will be a pretty sharp uptrend that will be reestablished here because anybody that's shorting here is probably shorting in the hole. but we'll see how they were rewarded last week. We'll see how they get rewarded this week by shorting this deep into it. Yeah, it's a little. It's been a long time. It's been technically, as we look at it, it's going on a solid 2 day, 3 days now of just straight down. So be very careful if you are shorting these markets on the Nasdaq. We're getting close to the end, but I do want to bring up Bitcoin. Bitcoin, I've been a bear for a long time, um, really since the highs at the 125 level. So let's take a look at Bitcoin. I want to see if I can pull up the daily. Bitcoin is well below the 200, and the 200-day simple moving average actually gave us clues in early November that this market was in a little bit of trouble, and it has been a constant sell ever since with a couple of consolidations. These consolidations are generally what I would view as bear market channels or bear channels. And even here, we kind of had a similar thing going on. We are not at the lows of Bitcoin, contrary to what some may say. Um, this bear channel looks very similar to this bear channel, and it can keep going down. So, my target again is actually at the 27,000 level, 20 in this 25,000 to 30,000. This is where I view as it being ultimate support. There's some reasons for it, but the main reason is we tend to go in cycles, and Bitcoin tends to sell off every 4 years. It actually started its sell off right on target, and that usually lasts about a year. And ultimately, somewhere between 70 to 80% of the market cap of Bitcoin disappears in that cycle. And there isn't any reason to doubt that that won't happen again. So that's the reason why I'm bearish on Bitcoin. That's all I've got for today. Any Oh, somebody said silver. All right, let's take a look at silver because I think I've got it here somewhere. We'll look at silver. And silver definitely is a leader. I would say that. Um, I think silver. Where is it? Need to find it. Let me look at silver. Okay, there it is. All right. Yes, silver has been a leader. It has struggled today. It's part of the reason probably why gold is selling off. And what you'll notice about silver is that it's still above its 200-day moving average. Unlike gold, silver actually has been a bit stronger, relatively speaking, in that sense. Now, it has not been stronger today. It has sold off. But you will notice that there is some smaller fibs that silver is trying to work off of. If it can hold 66.50 on silver and stay above it, there's a really good chance that we can move towards the 77.97 level. This would actually correspond with gold moving back towards 5,000, truth be told. So, a couple of other things to note. Yes, silver has an awful long ways to get back. Unlike gold, where gold I think could get back to its highs relatively quickly, silver is a long ways away from its highs. And so, the real question is, can it get back there in the next year? I don't think so. I think that this is a pretty substantial decline that's got to work itself out. It can still be bullish though, and it certainly isn't quote unquote as bad as it could be. Bitcoin is as bad as it could be when it comes to a bull market that turns into a bear market. Silver is kind of in the middle. It hasn't yet hit its 200-day simple moving average, which honestly I think it needs to, in order for it to ignite longer term investors to buy it again. The real question is, what will it do so in this round? And if it does, what does that mean for gold? If if we do see silver trading down, gold is likely to trade right back into its lows. So just keep that in mind. If you see silver headed towards this 58.88 level, then there's a good chance that gold is going to be back at its lows. But gold may not necessarily be lower than its lows. That would just be what's known as par for the course for gold, which is double bottoms. Gold loves to double bottom or double top, and so yeah, if we see silver trading back there, that's potentially what could happen. On the in the short term time frames, though, what you'll notice is that silver, because of um, its its alpha, it tends to move a lot farther than gold does, and so gold is only down 0.5% today. Silver's down 2.75%. That makes a pretty big difference. It is, it's a pretty substantial, well, 2.2 right now, but it's rallied. And the other thing too is on the 30-minute chart, we're actually back at lows that we were on Friday. So in that sense, silver is portending that maybe gold also comes back to where its lows were on Friday. And that's one thing that I've learned is that Fridays and Mondays in the markets don't really matter, because what ends up happening is you get a lot of ranges and they repeat. And so the key trend days in my mind are always Tuesday, Wednesday, and Thursday. Friday and Monday, they you could miss Friday and Monday and not miss anything, because ultimately they end up ranging anyways. And that's what we just saw here in silver. Now, I would say that silver is a much better short candidate than I think even gold is or has been, because when it decides to move, it really does move down, and that's what's been going on. We do have, interestingly enough, we're at the L3, L4 pivot area. If it breaks down below L4, then yes, I could see a breakdown. But if we hold this at level and we end up ultimately moving back above L3, I think I'd want to be a buyer of that. And I think I'd want to be a buyer because I think we could see a rotation back up to H3 or H4, if not further. So I think I'm going to be watching silver pretty intently. That's all I've got for today. Would love to get your comments. Please hit the like button if you can, and feel free to subscribe. If you're interested in testing out the indicator, let me know. I think it could be very helpful for a lot of folks. It gives you some context, it gives you an understanding in terms of what the trend is, and it gives you some pretty good entries and levels and some guidance. So happy to answer any questions or chat with you more about trading. We'll be back here next week at this same time. Thank you very much. Talk to you soon.